Welcome to The Explainer. You know, we love to take really complex stuff and just make it simple. And today, we are diving into something that trips up so many home buyers: closing costs.
So, picture this. You've been saving for months, maybe even years, for that down payment. You finally hit your goal. It feels amazing, right? But then, bam, just when you think you're at the finish line, this other massive bill shows up. This is the final hurdle before you get those keys. And trust me, it catches way too many people off guard.
Okay, here's a super simple way to think about it. Imagine you're buying a concert ticket. The down payment? That's the main ticket price. But the closing costs? Oh, those are all those annoying service fees and facility charges that pop up right at the end. You know the ones I'm talking about. They're basically fees for all the behind-the-scenes work that has to happen to make the whole thing official.
So here's our game plan. We're going to start with the basics. What even are closing costs? Then we'll get right to the point, the real price tag. We'll also look at the buyer versus seller showdown, because you got to know who's paying for what. Then we'll decode that super long, kind of scary list of fees. And of course, we'll wrap up with the best part, how you can actually save some money.
All right, first things first. Let's get a crystal clear definition. What on earth are closing costs?
So in a nutshell, closing costs are just a big collection of fees for all the different services needed to finalize the deal. It's not just one fee. You're paying your lender for, actually giving you the loan, you're paying a title company to make sure the seller really owns the house, and you're paying a bunch of other folks for things like appraisals and inspections. It's the cost of making that house officially, legally yours.
Okay, let's talk about the big question on everyone's mind. How much money are we actually talking about here? What's the damage?
So, the general rule of thumb, the number you really want to keep in your head is about 2% to 6% of your total loan amount. Now, that's a pretty big range, I know, and there's a good reason for that, which we'll get into right now.
Let's make that percentage real. Let's say you're buying a home and your loan is for a pretty typical amount, say $300,000. Well, that 2% to 6% means your closing cost bill could be anywhere from $6,000 to a staggering $18,000. And let me say this again because it's so important. That's money you need to have in cash on top of your down payment. Yeah, it's a huge chunk of change.
And this is where it gets kind of wild. A huge part of that 2 to 6% range comes down to one thing: where you live. Seriously, look at this. Local taxes and laws make a massive difference. In Washington, D.C., you're looking at over 17 grand. But in a state like Missouri, it's under 2,000. That is just an insane difference.
So, that probably makes you wonder, wait, do I have to pay for all this? It's a great question. Does the seller have to chip in? Let's get into the buyer versus seller showdown.
Okay, so here's the deal. Both of you, the buyer and the seller, have your own closing costs, but they're totally different animals. You, the buyer, you're paying that 2 to 6% for all those lender and third-party fees. The seller, they actually pay more, usually around 8 to 10% of the sale price. But, and this is a big but, most of that is just the commission for the real estate agents. The other key difference is how you pay. You have to show up with actual cash. The seller's costs, they just get deducted from the money they make on the sale. Much easier for them.
Now, this leads to a really cool strategy you should know about. It's called seller concessions. All this means is that you negotiate for the seller to pay some or even all of your closing costs. It's an awesome way to reduce the amount of cash you need on closing day, and it's something you see a lot more in what we call a buyer's market.
Now, hold on. Before you get too excited, there is a catch. You can't just ask the seller to pay for everything. The lender, your bank, actually puts a cap on how much the seller is allowed to help you out. And as you can see, those limits are different depending on what kind of loan you have. For an FHA loan, it's up to 6%. For a VA loan, it's 4%. You've got to know these rules before you start negotiating.
All right, let's talk about that moment when you get your paperwork and see this. Just page after page of fees. It looks super intimidating, right? It's overwhelming. But here's the good news. We can simplify this whole mess. We can actually organize every single one of those fees into just 3 buckets.
Yep, just 3 groups. Group 1, fees that go straight to your lender. Group 2, fees for all the other third-party companies involved. And Group 3, this is the money you're paying up front for things you'll have to pay later anyway, like taxes and insurance. See? Much simpler.
Okay, let's look at that first bucket. Fees for your lender. This is basically what the bank is charging you for doing all the paperwork and giving you the money. The big one to watch here is the origination fee. That's their main service charge. And a little pro tip, that one is often negotiable, so don't be afraid to ask.
Then you've got smaller stuff like an application fee and a fee to pull your credit report.
Next up, bucket number 2, the third-party fees. Think of this as all the money you're paying to other companies that have to get involved. So you've got the appraisal fee, that's to make sure the house is worth what you're paying for it. You have title insurance, which is super important. It protects you in case someone else comes along and claims they own the house. You have the home inspection, of course, to check for any hidden problems. And then you've got fees to the local government to officially record that you're the new owner.
And our last bucket, prepaids and escrow. Now this one's a little different. It's not really a fee for a service, it's you paying for future bills in advance. So, at closing, you'll usually pay for your full year of homeowner's insurance. You'll also pay a few months' worth of property taxes. All that money gets put into a special savings account called an escrow account, and your lender will use that account to pay your tax and insurance bills for you throughout the year. It's kind of like forced savings, so you don't get hit with a big bill later.
Okay, so after hearing about all those fees, I know what you're thinking. Is there anything I can do to make this bill smaller? And the answer is absolutely yes. You are not just stuck with the first number they give you. There are very real, actionable things you can do to lower these costs.
So let's run through the 5 big ones. Number 1, and maybe the most important, shop around for your lender. Don't just take the first offer. Get official loan estimates from at least 3 different lenders and compare their fees side by side. You'll be surprised at the difference. Number 2, negotiate. Remember those seller concessions we talked about? Use them. Number 3, look for help. Seriously, Google first-time homebuyer assistance programs in your city or state. There are tons of grants out there. Number 4, be careful with no closing cost loans. It sounds great, but it usually just means they're rolling those costs into a higher interest rate, so you pay way more in the long run. And finally, number 5, and this is crucial. 3 days before you close, you'll get a final document called the closing disclosure. You need to compare that document to your original loan estimate, line by line, and if anything looks different, you need to ask your lender why right away.
So here's the bottom line. Closing costs are a big deal. They're a major expense, but they do not have to be a scary, last-minute surprise. If you understand what they are, if you budget for them, and if you actively try to save money using these strategies, you can walk into that closing room feeling totally in control and confident, not stressed out.
They say knowledge is power, right? Well, you are now officially powerful when it comes to closing costs. So I'll leave you with this question. Knowing what you know now, what's your next move? Are you going to open a new savings account just for these costs? Are you going to start looking up those local grants we talked about? Think about it. It's your financial journey. What's the next step?